guys. Hey, welcome to another episode of the Practical Wealth Show. So I have a really cool show for you today. I have Miss Michelle McKenzie, the host of the Where's the Funding podcast. Okay. And she is the creator and host of the Where's the Funding podcast. And she curates conversations that demystify entrepreneurship and the fog around funding. Hence, where's the funding, right, for entrepreneurs? And so what we're going to do is I wanted to bring her on today and talk about that. Entrepreneurs know one job is raising capital, whether yours or other people's money. And so we want to talk about that. And she has a couple of specialty niches that she likes to talk about within that. So I'm gonna let her bring that up. But Michelle, welcome to the Practical Wealth Show.
Curtis, thanks for having me. It's strange being on this side. I had you on my show not too long ago, and now I'm on the other side of the mic.
I know. She's asking me questions. She's just sitting there and I'm blah, 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 rattling off whatever I'm rambling about.
I think I prefer asking questions and answering them, but we'll see what I can do.
We'll see what you can do. It's going to be a great show. So, Michelle, tell them what I didn't tell them and how'd you get into. Well, tell them what I didn't tell them about you that you want to know. And then I wanted to lead you off with a question is, why did you start the WTF podcast?
Sure. So real quick, my background is in international development. That's what I do. And I have experience in development finance. That's the world I'm coming from. And in that world, so I've worked in foundations and I've done grant work. And in the work that I've done, I've interacted with lots of entrepreneurs, particularly those that straddle between North America and the African continent. Mm-hmm. The inspiration for WTF is from a few Black women founders, particularly in the shea skincare, beauty care space, that I was friends with, and we were at a coffee shop one day, and one of them, her partner is based in Ghana, who she sources from, and they co-produce some of their products together that are sold in Whole Foods and Credo Beauty and Moms and lots of different retail stores here. Mm-hmm. And her supplier was down in the dumps. She was feeling down because when you're in business and trying to raise capital, it can be a tough process. Mm-hmm. And it's very emotional. And she was having a tough day because you have to understand when you're working in close collaboration with someone like that and you're looking to scale because they were looking to get put into more Whole Foods stores, mm-hmm. It's not just the person in the States who needs to come up with more capital. It's the person on the other side who has to also come up with more capital because she has to also be able to produce more to feed the demand here. And so she was having some trouble with that and she was feeling down, and we sent her a little cheer up video over WhatsApp. And then the person on this side was like, well, why don't you start a podcast to talk about these issues about Black entrepreneurs and women in particular who just struggle to find funding to grow their businesses. And that was the impetus for the Where's the Funding podcast. She said that, and then we're like, yeah, cute, sure. And then I started off actually with a co-host. So there were two of us when we started. Mm-hmm. And then I went off to work overseas. I was in Niger for like 3 months. And then my co-host reached out and she's like, when you get back, let's talk about this like in earnest and see if we can actually do this. And so I got back, we spun our wheels a little bit, and then we figured it out. The easiest route for us to get started was through Anchor. And we're like, okay, well, that's easy enough. Mm-hmm. And we got started right around when the pandemic hit. Mm-hmm. And it was actually a way for us to participate in conversations around what was going on in the world outside of our windows, mm-hmm. and to have something to do. So something that started as a fun project has evolved into something that has really taken legs and is really starting to move.
Okay, that's cool. And so let's talk about what, I'm sure that I've heard that as a similar theme. So what are some of the, well, let's talk about this. So are there any, does it matter the business or the industry, or is it it's basically all the same. Like where's I need to grow money to scale, because I could see that. Like a lot of times people will get contracts or you'll get accepted in the Whole Foods. Now it's like, oh wow, I I need more stuff to do this. So, if you're not set up for that, right, that big contract could put you out of business,
I'll share a story
Mhm.
with you about my first guest. So check out my podcast, Where's the Funding, on major podcast streaming
Mhm.
platforms, and check out episode 1 with Funlayo Alabi, who is the founder and CEO of Shea Radiance. I don't know, I'm not sure if we got deep into it in that episode about her journey into retail when she
Mhm.
first launched in Target, not being fully aware of what being in retail meant and how much money you actually need to get into retail. You have to have a war chest
Mm.
before you go into retail. Because if you try to go into retail without having a base of money to spend from, because it costs you to be in retail, you think that when a big box store or something accepts to have your product, they're sponsoring things. They are not. You pay to be on the shelf. And if you fail on their shelves, they send your product back to you and you have to pay to receive it.
Wow.
And she shared that story about getting into retail, being unprepared, not understanding the level of capital that she needed to make that a successful entry, and how it almost broke the business and
Mm.
broke her.
Mm.
And the period of deliberation that went on after that, trying to figure out, should I pack it up or should I continue?
That's major. I know it was hard, but I didn't know that all of that stuff, but it's more than a notion. And so did she, I like the happy ending. Did she get to did she
She's
get
still around and she's doing fantastic. She's a
okay.
fantastic female lady boss. And when you get the opportunity, check out our products that are in Whole Foods. They're in Giant. I think they're about to launch in Wegmans. They're in Moms. They're in Critter Beauty. You can get them online at Shea Radiance. She's still around. She's still kicking and she's still thriving. And the takeaway is, as an entrepreneur, resilience
Resilience,
is,
yes. Mm-hmm.
it has to be in your DNA. Otherwise, you're not going to make it, because it's not a straight line
Mm-hmm.
up. It's more wavy.
Mm-hmm. Yes.
And the down
Yes.
moments are down,
And you got
like
to
real
have
down.
yeah, and see, the thing with that, most of entrepreneurship is mental, right? I mean, it's stuff you got to do, but you've got to be able to work without a net mentally, work without pay, or have a vision. You got to be have a vision of what you want to do, even when your spouse or friends and family are talking about you. Why don't you just go out there and get you a good job or something like that, or don't leave your good job, that kind of stuff. And being able to have what I call the heart to see it, follow your vision, and stay with it. And so what are some other since you interview these people, I want to hear, you're the curator, right? So tell us a little bit about some other insights that you gained from, some of the people that you work for that have situations like that. 'Cause I think success leaves clues.
It does. And the persistence and the resilience are some key ones.
Mm-hmm.
I think in season 4, episode 6, I believe, with Afyang Williams, she's a young woman who has a food-based business in Nigeria, and she had just raised her Series A, and it took her 9 years to do. Right? She was innovating in a space that no one was doing anything in Nigeria at the time, which was in dried fruits. She was so understanding supply chains, and in the horticulture industry, you have, in a tropical place, you have lots of fruits. They come in season, then they go out of season. Like, okay, how do we stop up this food loss and this waste? What do we do with it? Oh, well, dry it, sell it as snacks, or transform it into juices and things of that nature. So no one was doing dried fruits at the time that she decided that she was going to go in this industry. So you know what happens when you're a first mover and an innovator in a space. you have to take the machete and you have to cut the path.
Right.
Because
Right.
no one has gone down that road before you. And talking about her journey and knowing that you have to be sticky on your vision, but flexible on the path. And making sure that you are being steadfast and having a support system around you to keep you together and to keep you grounded while you're in your period of wait, because your period of wait might take longer than you could have ever imagined. But if you're sticky on your vision and you believe in what you're doing, then you have to, because if you're no longer in the game, you can't win.
Right. Right. Do you find that one of the things you've ever watched Shark Tank, what they want to know is if they want to come up with their money, what are your sales, right? Do you have proof of concept? Are you making any money? Do you find that that the lenders, or even when you're raising money, they want to see that, they want to know, how can you pay me back? You know, they want you, what's Mr. Wonderful say? How soon am I getting my money back? And you've got to sell. You don't have a burn rate like these. Yeah, WeWork and all these people are raising money from these VCs, and they're not making money. They're just raising.
And you know that
right?
dude just raised $350 million, right? WeWork dude.
And then they'll do a IPO so that the VCs can get their money back. Okay. And it's not necessarily a good stock to own, but because they're not making any money. And so are the people making money as a requirement to raise money that how soon do they want to see, like they look at the sales, the revenue, the gross revenue? Are you selling anything?
You need to have a real business, a functional business with customers. And I always say your customers are your first investors. And people tend to forget sometimes that selling shit is a way.
We talked about that last time. Sell some shit.
A way of generating capital for your business. And that's how you know that you have a business, when people want what you have to sell. And your investors or potential investors, they want to see that proof that other people believe in what you're doing and they want it, and that your addressable market is large because they're looking to make a substantial return on their investment. So, and this is a key point that I need to make about the types of businesses that are investable from the VC perspective, because we have lots of different types of capital, right? We have grant capital, we have revenue-based financing, we have private equity, venture capital, all those different things. And you have to understand what type of business you are in terms of the type of capital you're looking to raise. If you might have a very successful business that's making money, but if it's not a high growth business that could potentially become like a unicorn, VCs are not particularly interested in you. So you might want to go get a loan or do revenue-based financing or get grants or pursue something else. So you have to understand what the different types of capital, what the requirements are for that, and whether or not your business is a good fit. So don't go knocking on VC's door if you don't have a VC investable type of business.
Let me ask you this, how in your experience or what people are talking about, how good are they with their numbers, their financials, they're knowing their profit and loss, their profit margins, their target markets? I mean, how can you get financing and not know that stuff? Because I find a lot of people don't know their numbers.
No. Let's be practical. If I come to you for a loan and I say I want to do this business, and I've heard you speak quite frankly, you spoke frankly on my show. So I think that's probably who you are in real life. And I come to you and I say, hey, I have this idea. And you're like, oh yeah, sounds good. What have you done?
For sure.
Show me your numbers. Who wants this product? What's your costs? Do you understand your cost structure? You would ask me, you're not going to loan me money if you don't know that I'll be able to pay you back, that you have something that could grow legs and take off and run. Understand that investors are in the business of making money. Yes. An investor it's not philanthropy. Like I said, there are different types of money, different types of funding. this is not being done out of the goodness of their heart. It's not a grant. No, there are grants.
Right. Are there grants?
There are grants.
I've had people say, who's going to grant you money? I was at something. You have grants for Black businesses, and maybe you would correct me. I was like, no. Okay, go sell something.
There are grants. There are grants, and there are certain grants that target.
I wish somebody would grant me somebody.
Black entrepreneurs, right? So there are plenty of grants out there. I worked for, well, my work is international. We didn't fund locally in the US, but I worked at a grant making organization for about 10 years. I've made millions of dollars in grants to other people. There are grants.
Where was you?
And there are grants for entrepreneurs.
Right. Okay. All right. So, but they probably don't want to. Well, I always tell people I can't steer a parked car. Like, so I'd like to see you moving to know this grant is not going to help you catch up on your car payment or something like that. You want to, it needs to go into growing the enterprise.
I'll tell you, when I was in grant making, we wanted to see their prior 3 years financials. What they were doing, because we also use that to make the financial projections for what we expect their performance to be during the period of the grant. Because we're giving them the grant to help accelerate them, for them to have growth. And we have to base that on something. You have to have a baseline, and then you have to have a target. And so we use their current performance, at least the average of their past 3 years, as the base for doing the financial analysis and the projections for what we expect them to do, and then set their financial targets based on that.
How often do the people that aren't successful don't have a marketing plan to get the leads or the financials of, okay, here's what, because I was told like the business plan, but the business plan is, here's what I intend to do. Here's what I want to make. Here's how I intend to make it, like simplified. You just, and what, because I'll ask people, Michelle, I think we had this talk. It's like, all right, I used to do some stuff with SCORE, right? So they wouldn't let me talk to the new people, right? Because, my sister calls me the party pooper.
You scare them off.
I'm scared.
And they'll just listen, go home and cry.
How much do you want to make? I don't know. I haven't thought about it. As much as I can. Wrong question, wrong answer. Okay. Well, how much, let's just say $100,000 a year. Because to me, if you're not trying to do that, you need to go get a job, because it's not worth it otherwise. And it's only $8,000 a month. So yes, I guess I do keep it real. And then I'll go, well, how much does your thing retail for? And how many of those do you need to sell to make $8,300 a month? And they, like 4 or 5 basic questions they couldn't answer. I was like, all right, you need to kind of go back to drawing board. Well, this is my passion. Nobody cares about your passion.
But I think those people are very early at that stage. If they're at SCORE, they're very early in their entrepreneurship journey.
Okay.
And so they're still trying to learn. And that's a good place to have those types of conversations with them, to help them flesh that stuff out. And even for people who have growth potential ideas, companies that could be growth companies that could go on and make millions and millions of dollars. That's why they have things like accelerators or incubators before that, to incubate the idea, right? And provide that type of capacity building and support at that early stage to flesh out and think through those things, to get them ready for the next stage of the business, for them to go out there and start fundraising, so that they have all of the cards that they need to have in their deck, go out and make incremental progress as they move towards creating the type of company that they want to create.
What's that level, in your opinion, and from what you've seen, that should start to, how long have they been in business, or what are their revenues, or like where that starts to make sense? Okay, I need to go out and it's time for me to raise some money up so we can grow. Is there a point that you've seen that, okay, this is time? Because sometimes you can sell your way. I don't think people, we talk about this on our show. As a matter of fact, it sent it off into another 20-minute rant back and forth on marketing, which is my second favorite topic. Go sell some shit. Go sell some stuff, right? Figure out how to sell your stuff. But you could hit a wall where, okay, I need more, depending on, especially if you're like in manufacturing or some stuff where you actually have stuff that to make the stuff that you want to offer. And have you found that there's a level like, all right, I hate to boil it down to a number, because I know every business is different, but is there like a common, hey, okay, I think you're ready. You got some infrastructure. Now maybe you want to raise some capital so you can grow.
I think that will depend on the type of business,
Mm-hmm.
the type
Mm-hmm.
of industry that you're in, and the market for that business, right? So it really depends.
When you say the market, let's go there for a second. What do you mean?
Like whether you have a large addressable market where you could scale quickly. And that's why investors love tech businesses, because it's easy for them to scale and make lots of money, and they get their return on investment. Tech is scalable.
Yeah.
And that's
software
why,
as a service,
that's
you know,
why
all
VCs,
that kind of stuff.
Yeah, love tech. It's harder, and it takes more, and it actually takes less. It really depends. It's easier to scale, like say a SaaS technology, than to scale stores that require physical, you have to get it's a different type of thing. It's a different animal. So it really depends on the type of business that you have. And you can have a very successful business that's not a scalable business. It can grow. There's a difference between growth and scale.
What's the difference?
Well, if it's a business that might never be able to go beyond the region or the location where it is, versus something that could become a regional powerhouse or a global business, because you can easily scale that to other places. And sometimes it depends on the type of business model that you have. Is your business model built for scale? If you think about McDonald's when it first started, if you ever saw that movie Founder,
I did.
Right? And yeah, what they were doing wasn't a scalable business, but he stole their idea and their business, and what he brought to it was something that could scale, because he turned it into a real estate business and then franchised it. So yeah, that's why I said it depends. So you have to understand the difference between growth, and you can grow, you could have a hair salon and you could get a few more stores, but can you scale that, right, on your own? Now, if you think about share, which is adding tech to beauty salons where you can rent a space or something like that, and it brings tech, because what a lot of founders are doing is bringing tech element to traditional types of business to scale them.
Yeah.
There is an app, oh gosh, I can't remember the name of the company that allows you to now book your like barbershop appointments online and pay online. The barber I go to, that's what I use. I use the app. I book my appointment, I pay, even do my tipping. When I get to the barbershop, I know all I have to do is sit in the chair. I'm not doing that, waiting for the barber to be ready. And I don't have the awkwardness of, well, how much do I tip? I've already done it. So when I go into the shop, my transaction, it's already done. We're not dealing with money. I'm just going to get my service. I sit down and then I get my service and I get up and I leave.
That's interesting. Yeah. I mean, I was just listening to somebody that I met. She was on another podcast, but I've been really delving into the laundromat industry. And so one of the things in that, the software, the scale, the coinless, credit card, touchscreen things and back office management is allowing this sleepy, what they thought mom and pop industry to really, where I know a guy that's like hundreds of them. He just buys them as their stuff. He's developed his own software as a service and they just keep it moving, coinless.
Squire is the name of the app. I was thinking like Squire. Yeah. And I think it's two Black founders, two guys who are behind Squire.
And do you need to be, this might be outside of the scope, but I was thinking about that. Let's say you have an idea. Let me ask this question. Do you need to be the tech person to get the tech developed?
No. That's an easy response.
Okay.
You can be a non-tech founder of a tech company.
All right, let's talk about that for a second.
You know why?
Why?
Because there are other companies that allow you that have services that can provide you where you can procure those tech services. So you just need to have the idea and you find the developers to develop your idea for you. And there are plenty of people out here. I just interviewed a woman last week. She is bringing a tech solution to the luxury retail space. She's not, she grew up in Silicon Valley and she's founded and been on the founding team of companies before, but she's not a tech person, right? She's not a designer. But you can find those people to put them on your team and you drive the vision. You don't have to be the one there writing lines of code. So it's not necessary. Guess what you do? You find yourself a co-founder who is a tech person.
Right. A la Russell
and then
Brunson.
You build out your team.
Right. Russell Brunson from ClickFunnels. Yeah. There's a book by Dane Maxwell called Start from Zero. And in the book, he says a business is a customer, a mechanism, and a result. And you don't have to create the mechanism, the code, the software as a service. You can get somebody to build it. If they've got one, you can, like I've got in my planning practice, I've got 3 different sets of softwares that I use to create the result for clients, but I didn't create any of them, but I'm really good now. Some of them I can use them and tell the story better than the founders, but they created the mechanism. I focus on the main part, which is attracting the customers, or I prefer clients, using this mechanism to create the result, which is what? Helping my clients become and remain financially free. So I think that, if you can get, because to me, if they'll find the customer, Michelle, right, they will, and they've got proof of concept, there's a lot of money out there that is looking for a home, but what do they want? They want their money back with a return. And so I think as entrepreneurs, I don't know that people are good enough at telling that story. If you do this, you'll get back that. Talk about, can you speak to that a little bit? And the people that you've interviewed, like they've got to, so for example, the first person with the target. So if I got this money, I will go from $1 million to 5 million, whatever. And I will give you an ROI of that. I'm sure she could tell that story. I'm hoping, for sake of this call.
Yeah. And a lot of people can tell that story. For instance, if you watch Shark Tank, that's kind of how the pitch goes, right? We're doing this right now. We're looking for this much in terms of capital, and it will take us to this place. That doesn't always mean that if you get that capital, that's exactly what will happen.
No.
Because you still have to navigate the whole running the business, and you're never always sure of what pitfall, especially, here's the thing about growth. Every stage of your business is a new set of learning. And that's why people who are looking for venture capital or private equity, those types of funding, part of the benefit of that is getting people who can guide you through that growth, right? Because Mr. Wonderful and Mark Cuban and Barbara and all those folks, they've been there and they've invested in lots of different companies and they have experience. Some are really experienced in retail, like Lori. So if you have a retail product, they can guide you. They can give you a roadmap, a blueprint, so that you don't have to be out there with the machete, chopping down the trees, trying to get there, because they've done it many times before with other people. And so that's the benefit of that type of investment, if it comes with that type of support and advice and access, right? That they're going to create doors for you. They know people. They can reach out to who they know at this retail store to try and get your products on that shelf. And so that's the benefit that could come from that type of relationship. No, it could also go the other way, where you're just not a good fit, or they want to take your business in a direction that you might not want to go, and then it can create friction. But that is a benefit that can come from those relationships with people like that when you're taking capital from people who understand how to build the type of business that you're trying to build.
Mm-hmm. That makes sense. You have a niche more so in with women. What would say the role women investors play in the funding, I guess, ecosystem, and how can they create more funding opportunities? Cool.
I love this question because women are a part of the solution for creating access to more capital for other women. Because women recognize the challenges that other women who are entrepreneurs face, and they understand the barriers that they encounter when they're trying to raise capital. And sometimes those are external barriers and sometimes they're internal barriers in terms of how we see ourselves and, the things we tell ourselves and all of that stuff that, we feel like we need to check everything on the box before we can raise our hand and say, hey, my business can do this and that, all of those things. And so they understand. And then for Black women and women of color, the intersectionality of the biases that they have to deal with, right? Being female and Black or female and some other type of thing as a double barrier. Because the research is there that clearly shows that Black people don't get funded at the same level as white funders. Founders are entrepreneurs, and women and Black women or Black women in particular are the least funded, even though they are starting businesses at a rate that is far more rapid than any other group. But when it comes to actually accessing funding, 1%. And it's consistent. The low percentage rate is consistent across women, across geographies.
Wow.
In Africa, very similar. I think because VC investments are growing in Africa. I had my good friend, Max Covelier, who does Africa the Big Deal, and they track venture deals in Africa. And I had him on the show season 3. And I think in 2021, startups in Africa raised 4.3 billion, and I think only 37 million of that, of 4.3 billion, went to
billion. Would it be?
Billion would it be?
Okay.
Only 37 million went to single female founders or female founded teams. So that's about 1% or a little less. I'm not so good with math, but it's low.
It's low. It's nothing. That's like, here's 35 cents. It's low when compared
and in
to
the States, it's not that different. And in Europe, women get like between 1% and 3% of venture investments. So it's consistent. There is a consistent messaging around women and access to capital to scale and grow businesses. And if you're a woman of color or a Black woman, it's much more difficult.
Let me ask you, so out of that, is there, I don't know if that's a number, but like, is it possible that there's just proportionally and not a lot of women trying to start businesses?
No, that's not what the data says.
Okay.
Amex does a study of that, and it shows that Black women in particular are starting businesses at a phenomenal rate.
Okay.
Problem is, a lot of those businesses don't sustain and they don't grow because of lack of access to capital.
Listen, the number one problem I see across the board in working with clients is lack of, because I separate them. Lack of capital, meaning savings, because they don't save in their personal finance, and then lack of access to capital, meaning other people's money, and it's a combination of those two things. And in your mind, from what you've seen, is there a reason / solution? Like, what could, I know this is a big question, but what could people start thinking about or doing different to kind of compress that gap? Is that going to be an internal thing or external thing? Are there, is it, because I don't know if you can change biases. If it's a bias thing, that's difficult.
Well, one of the solutions is, and that's happening a lot more in the past 2 years, is more focus funds that are focused on Black and underrepresented entrepreneurs,
Mm-hmm.
right?
Mm-hmm.
And creating more opportunities for them to get access to funding.
Mm.
I think Goldman Sachs has the 1,000 Black women fund, and there are lots of specialized funds like that.
Mm-hmm.
And even now, programs like that and VC funds. There's 68 Capital and lots of funds that are dedicated to Fearless Fund. I was on their summit today virtually that are dedicated to supporting Black entrepreneurs because they understand that they're running from behind and the challenges that they face. And part of the solution is ensuring that there are places that they can go to
Mm-hmm.
get capital,
Mm-hmm.
where people are looking at them and evaluating them in a way that is not peppered with bias.
Mm-hmm.
That's looking just at the business potential and not like, well, can this person really do that? You know?
How did they start to, other than listening to your show, start to which she's, I'm gonna have her give all that stuff out, start to think about getting in those networks to find that kind of stuff, that type of information, the Goldman Sachs, the this and that. Do you have any suggestions in that?
Google is your best friend.
Google's your best friend.
So besides Google, if you're on LinkedIn, start making connections on LinkedIn. You can search, there are all kinds of VCs and other types of investors and people who have grant funds and different things that are on there. So do your research. Research is critical. It's key. It's important. No one is going to cook a meal and just bring it in front of you and say, eat. If you're in entrepreneurship, you have to go and find it, And that means finding the resources that you need to make your business grow. It means knowing where those funds are, the different funds, especially the ones that are targeting underrepresented, diverse and underrepresented founders. You can just Google funds for underrepresented and Black founders, and I'm sure you'll get a list. Get on their email list, go to conferences. Like I was just on the Fearless Fund Summit. You have to be in the room with those people.
Right.
And when you go to, I just recorded an episode that's going to be released in season 5 when that starts streaming in a couple of weeks, with someone who was talking about real estate capital raise in terms of becoming a hotel owner. And I said, what are some resources that you can share for people who are listening who might say, oh, this is something I'm interested in and they want to learn more and understand how this business works. And she's like, go to conferences. And then she recommended some conferences. And then she said, some of those conferences might be pricey. It might be $1,500 to go. But I say, guess what? What you have to understand is that you're not spending $1,500 to go to a conference. You're spending $1,500 for access.
Yes.
For access to people, access to resources, access to people with capital. That's what you are spending that $1,500 on.
And I find that's a barrier. My dad used to always tell me, you got to go where
where the money is.
You got to go where the money is. You got to go. He says, go where the people you want to meet are and keep showing up. And eventually he used to say, they'll, well, okay, he keeps showing up here. He must be one of us. And then they'll start talking to you, but you have to be there and be in the, I was in Atlanta. It was something called the Clean Show. You do like every other year. And I'm, because I've been kind of looking at the laundromat industry, but there were like, it was huge. It was overwhelming, with the big things that clean hospital sheets and that kind of stuff. But it was like huge. But I got insight into that industry. I met some people. I've got a couple of strategic alliances working because I was in the room, and I always try to put myself in what I call a blue ocean. Like I'll go where nobody in my industry is at, right? And I just train myself to look for alliances. One of the things that, guys, if you have to invest, your number one asset is you, right? So you have to invest, Michelle, right, in your mindset, your skill set. What do you know how to do? What problems does your business solve for people? Because that's what you get paid for, right? To solve problems. And then to your point, your network, right? You have to invest in getting in better networks, being in the right rooms. That is part of how you grow, especially if you've got the mindset and the skill set. See, because to be able to solve the problems for the room that you're in, or shut up. So if you don't know, they just listen.
And it sounds cliche when they say your network is your net worth, but that saying exists for a reason.
Yeah. You're the Tom Solo of what did it say? The 5 people
that are around
you.
And
so
the best way to elevate your mindset is to get in a room with people who already have elevated mindsets, and your mindset will start to change automatically.
Just by proximity and the words they say. And I tell people success leaves clues. So like if you'll listen to the Shark Tanks, the Buffetts, just look at their language, what they talk about, how they view capital, how they spend money, what they're, what Mr. Warren always says, I want my money back and I want to bring back friends, right? So you never hear the magic of compound interest or buy and hold. He'll talk about that a little bit. I've seen him on shows, but that's just TV talk because that's not what he does. See, I look at what you do. He's creating velocity. It's all about velocity of money, putting money out, getting it back, putting it into something else, getting it back, and keeping money moving. And so as an entrepreneur, that's the stuff that you look for. How do you do that? The more knowledgeable you are, as your knowledge goes up, what goes down? Your risk, your anxiety. As your knowledge goes up, your anxiety comes down. So we all have to work at getting better, right? And because investing is not about buying, it's about becoming. So if you want to raise money, you have to become attractive to financially to people that doesn't hurt the other way either.
You have to look like a good bet.
Yes, that's perfect right there. You have to like a good bet.
Yeah.
And I don't even want to be a bet because I don't like gambling. I need a sure thing, or close to a sure thing as I get. And you have to be that person. So the more they see you have a vision, you're out there busting your butt, and then you're committed to it. Okay, well, that's contagious and that is attractive, and then you will attract capital to you. Michelle, what didn't I ask you that I should have asked you that you wanted to make sure that you talk about? Is there anything out there like that you wanted to make sure you
tell a little bit people around the role of entrepreneurship, right? Because I speak to a lot of entrepreneurs, and I speak to investors as well. But when thinking about entrepreneurship as a wealth creation vehicle, because
yes,
that's why people start businesses to solve problems, to create wealth. They're not just, especially if it's not a hobby, they're trying to build something, and they might have come to it with a passion, and they're solving what might seem like it was a problem that they were having, and then realizing that lots of people have that problem. But as you get into it, it's about creating wealth and hopefully maintaining that wealth. And actually tomorrow I am interviewing a repeat guest. Her name is Nikki Anani, and she's talking about family businesses. And
I know Nikki.
You know Nikki, right? Yeah. Nikki's coming back on the show to talk about her book, Lifetime to Legacy. Actually, the first time she used that term was on my show. So I take credit for that.
Well, there you go.
To talk about family businesses and how to ensure that those businesses, they move beyond the lifetime of the founder to create family legacy and also keep the family together. Because you know how families can squabble over money when when the founder dies. And oftentimes the business falls apart because there is not adequate succession planning and lack of understanding about moving forward and all of that. So just to really understand more the role of entrepreneurship as a wealth building strategy, and particularly in the Black community, how
multi-generational wealth. Like I think we think
wealth.
too short term. Like I've been,
and that's why it's like lifetime, beyond your lifetime to legacy. Like what's the legacy that business is
and
going
how are
to
you
create?
Training them? Like I don't think that you have to start. I'm in business because my dad was in business, because his dad was in business. So that was the example I saw. My dad told me never making money, work for somebody else. And then what I have been doing, this is a book called Become Your Own Banker by I teach different banking. All listen to my show know that. But he used to say, listen, you have to think 3 generations, right? There's a saying that says, what shirt sleeves are shirt sleeves in 3 generations. The first generation, think the Vanderbilts, right? The Vanderbilts at his peak, he was like the Bill Gates of his day. He had more money than the US Treasury, right? And then but he didn't teach his kids about money. So they were spendthrifts, building mansions, built more and all
Because they
these.
didn't have to earn it.
They didn't
They
have to
didn't
earn it. So they
understand the
told, oh, it's a
process. Yeah.
curse, right? And then by the 3rd generation, they're broke. Like 4th generation, Anderson Cooper is a Vanderbilt. He's only money he has is because he's a high profile job with the TV network. He doesn't have any of that Vanderbilt money, where if you look at the Rothschilds or the Rockefellers, they have systems of family governance and, ways they educate their thing. They buy insurance, they trust, they keep it together. They keep the money together. And I think that we don't think that way. It's past our nuclear family, or we don't even train them up right. So because the only reason to be in business is to be, the only reason to go into business is to become financially free. I don't, you know what I mean? Most people, they don't like, it's a difference. I think we talked about this before, is between being in business and owning a job, right? And so you want to be able to have a business that it's sellable. You don't want to sell it. It's got to work without you being there. And so you have to go to work on creating this multi-generational enterprise. So how do you see what you do? Talking about scale and some of the stuff you talked about earlier in the call.
Yeah. And even if you never sell it, because there are lots of companies in the US that are still family owned, big companies that we might know, right? They're not publicly traded companies, they're family owned. And that's why there are things called family offices.
Yes.
Where they invest in making sure that the family's wealth continues to maintain and grow. And those are very exclusive spaces to get into. Like, it's hard. You don't just walk off the street and get a meeting with someone in the family office, right? And a lot of them have been venturing into like being investors in VC funds and things of that nature, but they exist to maintain and grow the family wealth.
See, if we have to get out of, and you got to get levels of that if I think both our shows exist to kind of develop, because it's not, you can't perpetuate if it ain't there, that mindset of multi-generational wealth, of building an enterprise, of keeping it. And, it always says in the Bible, a wise man leaves an inheritance for his children's children. And I think that, that means you got enough to you're not living in a sackcloth for them. You're supposed to be able to, enjoy your wealth now, but you also want to pass it on, but you want to pass it on with instructions. And because I've seen people get $500,000, $800,000, blow it all in 2-3 years because they had no instruction. No, whatever. And I think that's a problem.
And an important element in the succession planning and the transition from founder to next gen is also maintaining the family relationships. It's about the relational part, because oftentimes it's the frictions in the relationships that break the business apart once the founder is no longer in the picture, once their lifetime has gone. And then the legacy falls apart because of the relational issues with the family, because there were not sufficient preparations and discussions, and the relationships weren't good. And everybody wants to just get their piece and go. And so it's important to understand that lifetime to legacy transition as well.
Right. That's a whole other show. So, Michelle, tell them as we close what that's a good thing. We have to segue and that gets another whole show, but tell them how they can follow you, where to find the show, what else you would like for them to follow, so they can stay in touch with you and get more into this discussion with you.
Sure. So you can find and follow the show on Apple Podcasts and wherever you stream your podcast. It's on most major streaming podcasts, and its home is now on the Alive Podcast Network at alive.com/WTF, which is short for Where's the Funding. And you can follow the podcast on Instagram at Where's the Funding _podcast. And you can also follow it if you're on LinkedIn. There's a show page, Where's the Funding? And you can also follow me on LinkedIn at Michelle J. McKenzie.
All right. So guys, we're going to put all that in the show notes. And Michelle, thank you. This is great. This is fun. Turnabout's fair play. So thanks for coming on the Practical Wealth Show. And
You're welcome.
yeah. And so I enjoyed we just talk. See, I have no agenda where I go. I just get interesting people and we just let y'all listen on really cool conversations. So Michelle, y'all go out there, follow her show. If you're an entrepreneur out there thinking about an entrepreneurship, you gotta,
it's the place to be to get valuable information if you are an early stage entrepreneur, and if you are on your fundraising journey, or if you're even just thinking about, well, what should my fundraising journey look like? You can get lots of guidance and advice from the people who've been on the show, from people who are your peers as entrepreneurs, and also from different types of investors about different types of capital that's available.
There you go. Success leaves clues. So you don't have to beat your head against the wall. Somebody has already, it's nothing new under the sun. So, you know what I mean? She's interviewed, she's curating the best stuff from these successful people. So you can save yourself a lot of time and trouble.
Just listen to my show.
Just listen to her show. Okay. That's what I do. I want shortcuts. So, Michelle, I appreciate you. Y'all go out there and make it a great day. And thanks for listening to the Practical Wealth Show. If you like this episode, leave us a review and share it, and definitely go subscribe to Michelle's show. And every time I think of WTF, I think of something else, but where's the
WTF?
Funding?
Where's the funding?
Where's the funding? And have a great day, everybody.
Thanks for having me.